Welcome to the Lever Trades podcast, where we take a deep dive into both foundation and advanced educational trading concepts. This video is not intended to provide investment advice. All content and opinions shared are for informational and educational purposes only. Trade at your own risk.
All right, so you've got those stock trading basics down, right? Feeling good, ready to take it up a notch.
You bet.
Today, we're not just talking about understanding the market, but about actually outsmarting it, using the insights from next steps after learning the foundations of stock trading.
We're going from theory to strategy.
It's time to craft your unique path to investing success. And that's what this deep dive is all about.
It's that next level, moving from just knowing about the market to actually beating it. That's the exciting part.
You've absorbed the what's of investing, but now it's about unlocking that why, figuring out what really makes those successful traders tick. Our source talks a lot about having a trading plan, and it really resonated with me.
Yeah.
But it's more than just a to-do list, isn't it?
It's more like, think of it as your investing constitution. It's that important because, it's easy to get caught up in the excitement of a hot stock tip. Everybody's talking about it. But your plan, that's where you decide what you really want out of this. Are we talking early retirement, funding that passion project you've always dreamed of? Right.
Those are the big questions. That's the foundation.
I love that. And it ties into what our source was saying about defining your why. Because let's be honest, a generic plan isn't going to light anyone's fire.
Nope.
Now, our source also delves into the world of technical versus fundamental analysis.
Okay.
I'm all for gaining in-depth knowledge, but sometimes, I'll admit, those explanations can feel a bit like trying to decipher ancient scrolls.
I know what you mean.
So for our listeners tuning in, what's the core difference here? How can they wrap their heads around it?
Okay, so imagine you're trying to, predict where a herd of wildebeest will run next you know. Just go with me on this one.
Okay, I'm picturing it. Lots of wildebeest.
So technical analysis, it's kind of like studying the trails they've worn, the patterns in their movements. You're using that past data to anticipate their next move.
Okay, so it's less about focusing on individual companies and more about spotting those larger trends in the market itself, like following the herd?
Exactly. You got it.
Got it.
Well, fundamental analysis.
That's like zeroing in on one single wildebeest. You're studying its health, how it behaves, its role in the whole herd. You're digging into a company's financials, checking out its leadership, seeing how it stacks up against the competition. You want to get a sense of its intrinsic value.
So you're trying to understand the why behind a company's stock price, not just chasing after the movement.
Precisely.
Got it.
It all boils down to finding the approach that just clicks for you. Some traders, they're amazing at reading charts. Others, they excel at uncovering a company's hidden potential. There's no one right way to do this.
And that's what makes this so fascinating, right? But before we get ahead of ourselves, start placing those trades.
Right.
Our source reminds us about something that's not always the most, shall we say, thrilling part of investing, but it is absolutely essential. Risk management.
It's not the sexiest part of the conversation.
No.
But think of it like this. You're not going to climb Mount Everest without the right gear, right?
Right. You need that safety equipment.
Exactly. And those stop-loss orders, they might sound complicated, but really they're your way of saying, okay, if this trade goes south, this is the absolute most I'm willing to lose.
So it's like setting those safety limits in place. You're preventing those small missteps from turning into, disastrous falls.
Yeah, it's about protection.
Tell me a little bit more about how those actually work.
Okay, so let's say you buy a stock at, let's say, $50 per share, right? You could set a stop-loss order at, say, $45. Now, if the price drops down to that point, your order automatically sells. That way you're only out $5 a share. You're not,
You're limiting that loss.
Yeah, exactly.
You're putting those guardrails in place, right? So you can actually enjoy the ride a little bit more.
Exactly. And just like with those stop-loss orders, it takes the emotion out of those tough decisions.
Yeah, that's so important.
And, just like you've got to plan your descent on that Everest climb, you also need a way to lock in those profits when your trade is going great.
Okay, so how do we do that?
That's where those take-profit orders come in.
All right, so tell me more about these take-profit orders. They sound like my kind of order.
They're great. Let's stick with that stock example, that $50 stock.
Yeah.
So you're optimistic, right? You think it's got potential, but you also want to make sure you actually lock in some profit.
Go ahead.
You could place a take-profit order at, say, $60. Now, when the price hits that target, bam, the stock automatically sells. You just secured a $10 profit per share.
Oh, that's nice.
Yeah.
So it's like setting a target on a prize wheel and just letting the market do the spinning.
It is,
No
exactly.
more of that second guessing yourself or getting greedy and letting those profits slip away.
Right. Or getting scared and selling too early.
Yes.
It's all about that discipline. You're taking the emotional roller coaster out of it.
Right.
And, just like there are different ways to climb a mountain, you've got different approaches to trading. Each one has its own pace, its own risk profile. It's not one size fits all.
Right. Our source gives us a nice little rundown of some popular trading styles. It's easy to get lost in the jargon, so it's really about finding your own rhythm, wouldn't you say?
Absolutely. It's about your personality, your lifestyle, how much time you've got. Someone just starting out might be drawn to swing trading, for example.
Okay.
Think of it like navigating a winding river. You're riding those medium-term market swings, holding trades for, a few days, maybe a few weeks, responding to those currents and eddies.
So you're not trying to, catch every single ripple in the water.
No.
You're looking for those more significant shifts in the flow, right?
Yeah, exactly.
Okay.
Now, imagine someone who loves poring over maps, really meticulously planning their route. That's your position trader.
Okay.
They're in it for the long haul. Sometimes they're holding trades for months, even years.
Oh, wow.
Yeah, they're not fazed by a little storm on the horizon. They're tracking those overall climate patterns.
Wow, they're playing the long game.
They are. Now, on the other end of the spectrum, you've got your day traders. Think of them as the whitewater rafters of the market.
I like that.
They live for that volatility.
They're in and out, in and out.
Yeah, in and out in a single day. It takes nerves of steel. You gotta have those lightning fast reflexes.
That is not for me.
Right.
So that's intense. Now, our source also mentioned scalping, which sounds even more intense, if I'm being honest.
Yeah, if day trading is whitewater rafting, scalping is like piloting a fighter jet.
Oh my gosh.
Imagine like a hummingbird, right? Darting between flowers, taking just these tiny little sips of nectar with each visit.
Okay.
That's what scalpers are doing. They're making dozens, even hundreds of trades in a single day, just trying to profit off those tiny price fluctuations.
Okay, so maybe not the best strategy for someone just starting to learn about trading.
Probably not. You got to be really plugged into the market. It takes specialized software, deep market knowledge.
It's a whole other level.
Yeah. The key takeaway here is this. The best trading style, it's like a tailor-made suit. It's got to fit you perfectly.
I love that. And speaking of finding that perfect fit, our source also talks about the beauty of a demo account.
Oh, the demo account. It's like the ultimate training ground. You have the keys to the sports car, but you're on a closed track.
Okay.
You can test your limits, see what works, make those mistakes, but there are no real-world consequences.
Okay, so this is huge for our listeners, especially for those who are new to this. So you're telling me I can test out all these different trading styles and I won't lose a single dollar of my own money if things go south.
Exactly. You can hit that reset button. You want to test a risky day trading strategy, go for it.
Right.
You're curious about the whole patience thing with position trading. The demo account lets you experience it firsthand.
And I can try my hand, like you were saying, with those high-frequency scalping techniques without the fear of, wiping out my entire savings.
Exactly. It's like having that safety net while you're learning to, walk the Wall Street tightrope.
I love it.
It's the best way to get comfortable.
Right.
Find your footing, build up that confidence, and really fine-tune those strategies before you ever have to put your real capital on the line.
So you've been practicing in the demo account, you've honed your skills, you've found a trading style that just clicks for you, and you're feeling ready to enter the real market. Our source emphasizes the importance of starting small.
Yeah.
And this isn't just for beginners, this is for seasoned professionals as well.
Oh, yeah.
It's like dipping your toes in the water before you do a cannonball into the deep end.
Exactly. It's so tempting to go all in, especially when you're seeing other people, seemingly making these big wins.
Oh, I know, especially on social media. Everyone's a trading expert these days.
Right.
Yeah.
But remember, even those experienced investors, they approach new ventures with caution. They know that managing risk, that's just as important as chasing returns.
So how do you actually start small? What does that look like in the real world?
One smart approach is to allocate just a portion of your capital, a specific chunk, for those initial trades. And be honest with yourself, it's an amount that you're okay with potentially losing. Think of it like your learning budget.
Your learning budget. I love that. So instead of putting all your eggs in one basket, you're carefully placing a few in different spots to see what's going to really thrive.
Exactly. It's about gaining that experience. And you know what? It's also about taking those get-rich-quick schemes
Right.
and throwing them right out the window.
It's slow and steady wins the race,
Right.
right? Okay, so you're starting small, but our source also stresses how crucial it is to choose the right brokerage. It's like finding the right Sherpa to guide you, as we were talking about before with that mountain analogy.
Absolutely. And it's easy to get fixated on just the fees, which are important, don't get me wrong.
Right, of course.
But you wouldn't choose your guide just because they've got a cool hat. There's more to it than that. Dig a little deeper. You know what I mean?
So what should we be looking for? What actually makes a brokerage stand out from the pack?
A really good brokerage, it's like that toolbox, that's got everything you need.
Okay.
Research reports, those analytical tools, educational resources, that's key.
Okay.
And of course, that user-friendly trading platform, because nobody wants to be wrestling with their tech when they're trying to make a trade, am I right?
No, absolutely not. You're speaking my language. So it's not just about making the trades. It's about having those tools and that support that can really, elevate your whole approach.
100%. It's like having that experienced Sherpa by your side. They're guiding you, they're offering those insights, they help you navigate the unexpected. Because let's face it, there's always going to be something you didn't see coming.
Always. And speaking of those unexpected detours, our source talks about not spreading yourself too thin when it comes to investments.
Yeah, I see this all the time, especially with new investors. They get so excited, so many options, so many possibilities, and they end up with a portfolio that looks like a pantry just full of random ingredients. You open it up and you're like, what am I going to make with this?
Okay, yes. I am so guilty of that in my own kitchen.
Me too.
Yeah.
But when it comes to investing, less can be more.
So you're saying it's better to really understand a few key companies or those sectors you were talking about
Exactly.
rather than having a little bit of everything?
You got it. It's about that deep dive, that due diligence, really becoming an expert in a few specific areas that you're excited about. That's how you make informed decisions. You manage that risk. And ultimately, you're positioned for, hopefully some bigger wins down the road.
So it's quality over quantity, right?
100%.
It's about mastering the art of, selective investing.
And just like with any art form, there's always something more to learn. Our source made this point of, even the most successful investors, they never stop seeking out knowledge.
They're constantly evolving, refining those strategies.
Because the market, just like that river we were talking about earlier, it's always flowing, always changing.
And that's what keeps it interesting. So how do we keep up? How do we make sure we're not getting swept away by the current?
Well, the good news is we live in a time where information, it's everywhere, right? You've got books, online courses, webinars, podcasts like this one.
So many resources.
And financial news, of course. It's like having this incredible library at your fingertips. But I get it. It can be overwhelming.
Oh, for sure. It's information overload sometimes.
Start with what you're most interested in.
Right.
What skills do you want to develop? Are you fascinated by technical analysis? Do you want to get to know some specific industries? Figure out what makes you tick and tailor that learning journey for yourself.
I love that.
Yeah.
Let's not forget, we don't have to go it alone, right? Our source talks about the power of connecting with other traders,
Right.
building that sense of community.
Oh, it's huge. Joining those online forums, going to some meetups, even just finding a trading buddy that can make all the difference.
Because we all need that support system.
Absolutely. It's like having that team of fellow explorers by your side as you're navigating the ups and downs of the market.
I love it. And finally, our source talks about something that might seem a bit old school, but it's so powerful. The trading journal.
It's a game changer. Imagine having this detailed record, and I'm not just talking about numbers here.
Right.
You're writing down those thought processes. What were you feeling? What factors were you considering? Why did you make that trade? That's the good stuff.
So it's about understanding the why behind those decisions.
Yes. And then here's the real magic. You go back and you analyze those past trades. The good, the bad, the ugly. You start to see those patterns. Where are your strengths? What are some blind spots?
It's like holding up a mirror to your own investing style.
Exactly. And that helps you become more disciplined, you make smarter decisions, and hopefully you see those results you're working towards.
And that brings us to the heart of it all, right? Mastering the mental game.
Yes.
Because as we've been saying throughout this whole deep dive, it's not just about understanding those external factors, it's about that internal game.
Think about those top athletes. What sets them apart?
Right.
It's not just physical skill, it's that mental toughness. It's about staying calm, cool, collected, even when things get intense. And honestly, trading, it's no different.
So how do we get there? How do we cultivate that mental resilience? How do we make sure we're not letting our emotions run the show?
It all starts with self-awareness. We've got to acknowledge that fear and greed, those are players in this game. They can mess with our heads big time.
Oh yeah, we've all been there.
Right. You get caught up in the hype. You make a move based purely on gut feeling, and then you're like, what was I thinking?
In there.
But the key is we create systems to help us stay grounded.
Okay, I like that.
We stick to that plan. We talk about those trade execution rules.
Those rules, yeah.
And remember, every trade, win or lose, it's a chance to learn and level up.
It's all about those learning opportunities.
Exactly.
So to wrap things up, we've covered a lot of ground in this deep dive.
We have.
What's the most important thing you want our listeners to walk away with today?
Investing, it's a journey. It's not about getting rich quick. It's constantly evolving, learning those new strategies. And honestly, it's about understanding yourself, how you react to risk, how you define success.
It's about taking control of your financial future
Exactly.
and defining what that actually means for you.
Couldn't have said it better myself.
Well, on that note, folks, it's time for us to sign off. Remember, keep learning, stay curious, and until next time, happy investing.